Good day, subscribers, and welcome into the Tesla education. Good day, subscribers, and welcome into the Elon Musk education channel. Hey, I know what you're thinking. You're thinking it's been a lot of Tesla videos lately, and it has been a lot of Tesla videos lately. 3 of the last 6 videos have been Tesla, but what can I say? The stock market is pretty boring right now. All the big companies have already reported earnings. We don't have much for stock market moves out there. There aren't like huge moves in the stock market right now. Everything's real calm, so it's kind of a lame time. But Tesla, we got a lot of news going around Tesla right now, so it's just a hot news cycle for Tesla at the moment. And Tesla stock had 3 different news articles come out today around Tesla. Okay, so first off, in regards to Tesla, as I've taken the screenshot about an hour or so to go in the market day, Tesla's up around 2.7%, so it's having obviously a way better day than what the markets are doing in general. Some people ask me like how I'm doing on my Tesla position. We're doing decent. We're obviously not up nearly as much as we were at one point. On this account, we have 50 shares. We're up a little less than 11% on those shares there. So, I mean, nothing I can complain about, but nothing that's like crazy. And then in this one, we're up around 15% on this one. This one, we just own 6 shares in total there. So as I said, we got 3 news stories in regards to Tesla today. Some of them are good news stories and some of them are not so good, okay? This first one is around one of Tesla's largest institutional investors, and it just cut its stake in half. Rowe Price owned around 9 million Tesla shares by the end of last year, according to the SEC document. The new smaller stake represents around 5.2% of the electric automaker's common shares outstanding at the end of December. Previously, Rowe Price was the electric maker's second largest shareholder, only behind CEO Elon Musk. Now, we don't know why Rowe Price went ahead and cut their shares substantially as far as their stake in Tesla stock. We don't know why they went ahead and did this, but we do know that Tesla stock ran heavy in the winter months, okay? November, December, this was just a hot stock, and as the markets were faltering and as the markets were going down, Tesla was the one bright shining star that just seemed to go up and up and up. So we don't know if maybe it was one of those things where Rowe Price just kind of looked at it and they were like, maybe at $350, $360, $370, some of those prices, let's just get out of these shares, or not out of them completely, obviously. They still own a huge position, but they're like, let's take some money off the table here. Let's go ahead and buy back if the shares do fall. We know Tesla for the last several years has been anywhere around that $300 range, give or take around $50. So maybe it was Rowe Price saying, hey, you know what? These shares are going to come back down again. We can go ahead and up our stake again. Or maybe Rowe Price was just like, we don't want to be as heavily invested in Tesla anymore. We don't know what the facts are around that. All we know is Rowe Price, which was a massive investor and still is a massive investor in Tesla, they cut their stake substantially, all right? News story number 2 coming out today is Tesla's electric vehicle dominance is about to have serious competition. Morgan Stanley expects Rivian will be the, quote, the next serious competition from a clean sheet startup. Analyst Adam Jones estimates that currently Tesla makes up around 80% market share of electric vehicles in the US. First off, I'm rooting for Rivian. I hope they do awesome. I hope they become a really big electric player. But let's not forget, Rivian is like way behind Tesla, okay? You got to understand, like Tesla's been working on this for a long time, like a decade plus. They're like getting to the serious point where now they're at mass scale of producing Model 3s out there. So Rivian, I hope they succeed. I hope they do awesome. But you got to understand, like Rivian is starting from so far behind, this game. Like Rivian maybe can compete with some of the bigger dogs out there, like the Chevys and the Ford and some of those guys that maybe haven't had any success really in the electric vehicle space. But if I'm looking at it from, are they a Tesla competitor? Maybe to a certain extent. But if I'm just kind of looking at it, I'm like, Tesla's got so much scale at this point in time. They have so much brand power at this point in time. Like we've heard of a lot of electric vehicles, trying to come up, a lot of startup companies, and many of them have just failed and failed and failed. I hope Rivian makes it, but if I'm just looking at competitive threats, it remains to be seen. It's hard to see Rivian like all of a sudden go from basically a non-existent company a few years ago to all of a sudden producing mass amounts of vehicles in any shorter order, and that's what you really need to do in order to compete with someone like Tesla that's putting up big numbers now at this point in time. So I'm rooting for Rivian. I just don't see them as a serious competitive threat, at least in the short term. Maybe 5-10 years from now it's a different landscape, but if we're talking about over the next few years, it's just there are 2 companies companies on two different levels right now. That's the bottom line there, okay? And news story number 3 is more around good news. This is, in my opinion, why Tesla shares were up quite a bit today, despite the market kind of not being in a very good day out there. But Canaccord upgraded the stock to buy from a hold and said the electric vehicle story is underappreciated on Wall Street. They said, quote, "We believe the last 2 quarters and recent guidance for the first quarter have removed significant concerns for both production capability and profitability of the critical Model 3, the analyst wrote in a note. As such, we see more stable 2019 with far fewer concerns for investors in the company." So yes, absolutely, as far as shareholders' minds, the fact that Tesla's been able to be profitable back-to-back quarters, 200 plus million back-to-back quarters, and get out a ton of Model 3s over the past couple quarters, that definitely makes a lot of investors like myself, rest easier at night. The next question is, how long do we have to wait for that $35,000 Model 3? I think there's a lot of pent-up demand there. The question is, how much pent-up demand? Are we talking about, Model 3 in just North America? We're talking for a second here. Are we talking about just in North America? Could we get back up to a 5,000 to, let's say, 7,000 run rate on Model 3 once the $35,000 Model 3 hits? That's a big question for me. I can't wait to see it. I think there's a ton of pent-up demand. It's just, now we're just in the waiting game. When can Tesla get costs down enough where they can actually sell the $35,000 Model 3 and actually, still make a profit on it in the end? So that is going to be fun to see. And that, in my opinion, is the biggest thing in investors' minds. And also the other thing that's in my mind personally is how is cash going to be allocated throughout 2019 and then going into 2020 when Model Y ramps? That's a big question for me. So that's kind of what I'm looking at, but I can definitely understand, back-to-back quarters, that definitely makes a lot of investors, sleep better at night that they've been profitable back-to-back quarters. They're also saying recent price cuts are further evidence that discounting is having the desired effect, he said, with shipments to the EU and China looking strong. The teeny profit the company predicted for the first quarter will prove to be the low point in EPS for the year, he's saying, okay? He's saying either whatever happens in the first quarter, that's going to be the worst. It's going to get better from there. It may put the arguments of short sellers to rest, he said. He says, our prior concerns around corporate governance were allayed with the addition of Larry Ellison and Miss Wilson Thompson as independent directors, and we believe Elon Musk is demonstrating a calmer demeanor, characteristics of strong leaders, said the analyst. He brings up short sellers there, and in my opinion, I don't think short sellers are going away in 2019. I just don't see it. Maybe in 2020, maybe that's the year we start to see short sellers go away, but if I just look at it, I'm like, can I really see short sellers going away in 2019? Probably not. They're probably going to stick around, see what the demand is for Model 3, especially if the $35,000 model comes, and can Tesla make that car actually profitable and things like that. I think that's what a lot of these shorts are waiting for. Maybe if they can prove that outright and then they ramp Model Y successfully, then all of a sudden as a short seller, I think at that point you're just running out of bullets at that point in time. And I think he brings up a great point is around Elon Musk and his characteristics as far as his behavior goes lately. Like, he hasn't done anything crazy, and that's just a good sign. Maybe he's not on nearly as much stress and things like that, but the company just seems to be in a more matured state now, and it's just, they got this focus and they're laser on that focus now. No tweets, no crazy tweets. Yeah, Elon kind of let me down here. I said no crazy tweets, and then I log in to his Twitter. It says Elon Musk says moving to Mars will be below 100,000. You know what I meant. Anything like that. So it's definitely good to see. And we also look here, and Canaccord is raising its price target on Tesla shares to $450 from $330 based on a 30 times the fiscal 2020 earnings per share estimate of $15.02. So they're saying Tesla in 2020 is going to basically make around $15.02 per share. That would be a pretty impressive number, in my personal opinion. May be conservative given the strong earnings growth expected in the next few years. The new target is about 44% above the current price. That's a big 12-month price target there of $450. The stock will have to, move up, and not only move up, but we've seen Tesla, when Tesla shares have moved up in the past, at least if you look at the last 3-year chart, they just kind of move back down. They move back down. They get excited. They go up to 350, maybe above 350, then they drop back down. So to reach a 450 over the next 12 months, it's going to not only have to get there, but it has to, stay there basically. So exciting interesting stuff. Obviously, analysts, some are very bearish on the stock, some are very bullish. It's just that stock right now that just has a lot of people on each side tugging, saying this is going to be a bankrupt company, insolvent. You got another, base like myself that believes this company is going to has an opportunity to be a $2,000-3,000+ stock 5-10 years from now. So you got them both pulling from both sides. It's really fun to watch. So anyways, let me know what you guys think about this down there in that comment section. Hit that thumbs up button if you enjoyed. Thank you for watching. Have a great day.